Hello, YouTube. Today we have a pretty deep review of the executive order that Biden made in the beginning of the year, where he was requiring updates from the Treasury about the feasibility of the rollout of the central bank digital currencies. So, reviewing the executive order that Biden made in March 9th, Executive Order 14067, ensuring responsible development of digital assets. If you read through this executive order, once you get down to the bottom part here, it tells you that the president, they shall report on the future money and payment system within 180 days by the Secretary of the Treasury. So that report has been done, and in this report it covers the potential implications of the United States central bank digital currency, national interest, economic growth and stability. It also covers financial inclusion, global, foreign, sovereign, private implications for our financial system and democracy. So it's a pretty in-depth report. Now this report was released in September of 2022, just like a couple months ago. The future of money and payments goes over from the Treasury, goes over a lot of stuff. I'm sure most people here don't want to get into 56 pages of details, so we'll basically cut into the report and go to page 26, because that's where the main subject of, well, maybe we won't go to page 26 easily. Well, we'll scroll down. But page 26 goes into the central bank digital currency adoption and development design. The central bank digital currency could be designed to interoperate with the foreign central bank digital currencies for cross-border payments, interoperability, including separate but compatible CBD systems that share common technical standards. I think most of us understand that these standards are talking about are RippleNet, on-demand liquidity, XRP, Stellar, XLM, because they're discussing distributed ledgers, and we already know the distributed ledgers that have been built on by governments, central banks, or the Stellar and XRP ledgers. Alright, so they're looking at an architectures of the central bank digital currencies of a single tier, direct central bank with another central bank for transferring, cross-border, and a two-tier where this is the big thing. They want to force the banks to still be relevant in this new system. So they're going to roll this out where they expect all citizens to continue using the banking sector, where they can continue to loan out money, and basically nothing changes. Just try to roll into a new system that's cheaper for the banks, and real-time payments can be made, but they keep you, the citizen, running the banking system the same as it is currently. We all know that eventually the average person's going to realize that the bank isn't needed anymore and they can be their own bank, but the government's going to fight that. So just moving forward, the single tier model for the retail central bank would issue the central bank digital currency directly with the public the central bank would be responsible for all anti-money laundering obligations, transactions monitoring, filing suspicious reports with customers, etc. So, see, nothing changes. They want to control you with this new central bank digital currency, which is probably going to give them even greater ability to control. Anyway, this is a pretty lengthy and in-depth report, but I'll add the link for it so anybody who wants to really dig in and study on it can see exactly what they got planned and how they're going to roll it out. Now, one of the next steps in this rollout that they've got is changing the structure of liquidity requirements within the market systems for clearinghouses. And as of November 3rd of 2022, the Securities and Exchange Commission, the National Securities Clearing Corporation, which was established in the US in the 70s to help take the strain off of the stock market handling paper stock certificates, grouping and just restructuring the way they settled the transactions. They also working with the Depository Trust Company and the Fixed Income Clearing Corporation, FICC, the DTCC, the Securities and Exchange Commission has changing the qualified liquidity resources. So exactly how or what does that mean? They don't get into clear details, but it's going to give them some kind of flexibility to use assets for settlements. I'm going to say that they're opening the window to give and include digital assets into this liquidity resources to allow for these settlements to be run on the distributed ledgers, to increase the speed and settlement time for the new system that's coming. So this is a 5-page report, and these rules will be put into effect 45 days after this was released. So we're looking around the 18th of December that these clearing corporations will have the legal clarity to engage in whatever new system of framework that they're putting in place for their settlements. Anyone interested in more information about this National Security Clearing Corporation is started or established in 1976, provides clearing, settlement, risk management, central counterparty services, transactions for virtually all broker-to-broker trades, including equities, corporate, municipal debt, American Depository Receipt, exchange-traded funds, unit investment fund trust. So this is the player that handles the stock trading in the US. So they handle a lot of money. So the Depository Trust and Clearance Corporation, which everybody hears about how much money they move and how much the price of XRP will go to if it starts to settle the debt that, or the transactions that go through the DTCC. So we look at this right here on their own, this Investotopia, and you can look at the amount of money that they're claiming that they transfer and run through this on a daily basis. It's showing it's in the trillions. They're doing settlements and clearance for government and mortgage-backed securities, corporate municipal bonds, derivatives, which is the big one, mutual funds, money markets, alternative investment products, insurance products. So you're talking about like basically all the money that gets transferred through any kind of a trading platform. So it's kind of a big deal that they're involved in the SEC's reclassification of liquidity requirement, changing the settlement guidelines that they can operate within. When we go over here to Ripple's website, we see that the XRP ledger uses a consensus protocol. So it's not a proof of work like Bitcoin, and it's not a proof of stake like Ethereum. They use a Ripple consensus protocol between validators to update the transaction. So a distributed ledger that's more scalable, faster, and greener, which is the standard that all of the International Monetary Fund, the World Bank, all of them are adopting and planning to roll this out on. I'm sure most people have seen this chart showing the banking systems for your major banks that are part of the IMF, SDR, special draw right, showing how they are using the interledger protocol during this rollout phase, coexistence phase between the new system and the legacy system. But eventually the XRP ledger is the goal between all the central banks and liquidity providers to allow for fast and instant transactions around the world with little to no cost. That's where we're headed. So if you don't have XRP, I think it'd be, not financial advice, but I do think it'd be a smart investment to at least get a little. If you don't know how to do it, you can email me and I will work with you and we'll figure out the best method for how to get you a little bit. You can contact me at learn@cryptothenew.money or call me at this number and we'll set you up a time and walk you through the process of getting an exchange, setting up a Google Authenticator, getting you set up with some kind of a hardware wallet for cold storage so that you can keep your stuff off the exchange, and then all you have to do is just wait to sell. So I thank y'all for listening, and I'll talk to y'all later.